Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Weinstein, founder and CEO of Seismic Capital, going to discuss opportunities within the VC landscape. Stephen, it's great to have you with us. Welcome to TradeTalks.
Hi, Jill.
And there certainly are opportunities that you're seeing in a recessionary environment or potential recessionary environment. And of course, we have bank failures that we've experienced over the past couple of months. Where are you finding some of those opportunities?
We're seeing them everywhere. We're inundated by companies that used to chase traditional venture capital, and since we have a slightly different model and we help our companies grow, they've been really coming toward us.
So you primarily focus on early stage companies.
We do.
What sectors and where are you looking to invest in the coming months?
We're looking to invest in companies that are going to shake up their space. That's why we're Seismic. We are always looking for the unicorn. Everyone in our space is. We think that we have a slightly different model where we can attract non-traditional entrepreneurs, women, people who haven't typically started companies, and by looking in those spaces, sometimes we don't have to compete to buy into a deal.
What are some of the sectors that you're looking at?
Sectors, we like straight tech, we like gaming, we like medical, we like motivational business tools. We're pretty industry agnostic.
What's your outlook for the VC space over the next 6 to 12 months?
Well, the VC space has produced year after year for decades. We've felt that it has been limited to only ultra-high net worth individuals, so we've changed our model and made it possible for regular investors to come and invest with us. $1,000 minimum investment in our space, which is unprecedented. So I think I answered your question there.
You did answer my question there, but it's interesting with your process as well when it comes to vetting companies.
Yep.
You actually work with external partners to help
We
you
do.
with that process. How does that work?
Well, we know that we can fall in love with a company. The CEO comes in, he's got a vision. It's hard not to get entranced. So since we're fiduciaries and we want to make sure we're being good investors, we look to outside third parties to diligence just about everything about the company. The company itself, the industry it's in, how are we going to make money in that space, the personnel, the technology, because we want to make sure that we know everything about the company, not just that we fell in love with it.
Yeah, and you seem to get excited about that point. So my question to you is,
Yes.
this valuation reset that we've experienced over the past 12 to 18 months, for a number of reasons, there is a silver lining where perhaps this valuation reset needed to occur. It's an opportunity for VC to work with founders on how to run a company that's profitable and with good governance and so forth. It seemed as if this had to happen because it was incredibly lofty out there.
There were a lot of people spending a lot of money on deals that we couldn't really understand, and I think the valuations, you're right, have become a little more sensible.
Is there anything else happening in the VC space in the near term that we should know about?
In the near term, I think people are back to investing in VC. I think the fact that the doors are open to people to diversify their investments, their own portfolios, not just stocks and bonds, but they can now be in VC and lots of other things as well. I think that's an important turning point for the industry.
All right, Stephen, we appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.